Wondering how to choose the right ETF for your investment portfolio? Let's delve into the fascinating world of exchange-traded funds, specifically focusing on the iShares Core MSCI World UCITS ETF, or IWDA, and the iShares Core S&P 500 UCITS ETF, also known as SXR8. These ETFs are UCITS compliant, meaning they adhere to stringent European Union guidelines offering transparency, liquidity, and investor protection. They're attractive to those seeking regulated, well-diversified, and potentially less risky investment options. First, let's look at the iShares Core MSCI World UCITS ETF IWDA. Its main objective is to track the performance of the MSCI World Index, which represents large and mid-cap stocks across 23 developed market countries. This gives you broad exposure to developed market equities. Contrastingly, the iShares Core S&P 500 UCITS ETF SXR8 aims to track the performance of the S&P 500 index, made up of 500 of the largest companies listed on U.S. stock exchanges. This provides you with focused exposure to large-cap U.S. stocks. When it comes to performance, remember that past performance is not indicative of future results. Nonetheless, the IWDA, being a global fund, is influenced by a wide array of economies and sectors. Historically, global stocks have offered growth potential but can be volatile. On the other hand, the SXR8 typically reflects the performance of the U.S. stock market, which has historically performed well over the long term but can also be volatile. The IWDA has a 5-year annual return of 18%, while the SXR8 boasts a 5-year annual return of 22%. Moving on to the total expense ratio, or TR, the IWDA has a TR of 0.20%, while the SXR8's TR is 0.07%. The TER is a measure of the total costs associated with managing and operating an investment fund. In terms of holdings, the IWDA holds a diversified portfolio of stocks from developed countries around the world. This diversification can potentially reduce risk, but also dilutes exposure to any single country or sector. The SXR8, however, is concentrated in U.S. large-cap stocks across various sectors, reflecting the sector composition of the S&P 500. The IWDA provides broad exposure across various countries and sectors, offering a global portfolio with diversification benefits. The SXR8, however, is focused primarily on the U.S. market, with sector exposure that mirrors the U.S. economy. In conclusion, choosing between the IWDA and the SXR8 depends on your investment goals, risk tolerance, and market outlook. The IWDA is suitable for those looking for exposure across various developed markets and sectors, while the SXR8 is ideal for those seeking concentrated exposure to U.S. large-cap stocks. Remember, an informed investor is a successful investor. Consider your options carefully, and happy investing.